Morning, everyone. Let's get going here. All right. Even though we were only open for half a day on Friday, incredibly interesting day. If I had to go over some of the things that we've talked about for the last week, I'd say that we pretty much got everything right, with the exception of maybe low volatility potentially drift up into year end. We talked about commodity prices continuing to stand under pressure, and then for them to go lower. We mentioned gold probably getting ready to have a hard rip somewhere off of that 1200 level, which happened. We talked about oil getting down to the 65 level. All these things happened, but we've started to get some volatility again in markets, which is actually quite exciting. So anyway, oil producers got hammered in the States on Friday in this half-day session. We had light sweet crude prices down over 10%. Brent also following on, of course. Absolute beating there. You can see some of the big ones: Schlumberger, Halliburton, Chevron, ExxonMobil. All the guys getting pretty much decimated. If you follow on into Asia overnight, the Nikkei managed to hold on relatively well, simply because the yen weakened a little bit more, but some of the other markets got hit hard, more specifically the Australian market, which is obviously very resource heavy. Some of the things deep into the red, down 5% on Billiton, down 4+% on Rio, really just getting a complete hammering. I think the Hang Seng is lower. Obviously they got a credit rating downgrade by S&P, but I also think there's the whole Occupy Hong Kong stories going on again, and the people in the streets rioting and the whole thing. So I think it's a confluence of factors that's really putting the pressure down on the Hang Seng. Shanghai managed to grease out a gain, but there was some negative data as well out of China, so which obviously feeds into the negative commodity story. So just all in all, this move in the commodity prices is starting to feel a little bit more like a capitulation move. I don't know that it's over yet. Usually, you got 10+% out of the oil price, so maybe it could be quite close. But bottom line is these are the types of moves that can potentially be the ends of some of these moves. So I'm not saying that we've reached a bottom whatsoever yet in the share prices, but maybe in the physical we're getting closer. We're going to watch for the same types of moves in the underlying shares to see if we have a chance for a bottom. All right. This morning, our chart of interest is out of FactSet via the Wall Street Journal. We've got the impact of basically this oil slide, and what you're seeing here is obviously the sell-off that we've seen in terms of market cap out of some of the major oil companies. Actually haven't been hit as hard as maybe they should have been hit, or as they could have been hit. And I think if the oil price stays down here, you will see a further slide there. But some of the other shares, faring really well because they're obviously inversely correlated to the price of oil, probably haven't even seen the same sort of upside that they should, like UPS, General Motors. The airliners are some of the bigger ones, obviously, like the cruise liners, like Carnival, that sort of thing. So there are a lot of guys out there that also really benefit from lower oil prices, and we could see that filter through maybe to one or two of the shares on the exchange here, maybe like an Imperial, something like that. All right. Corporate action this morning, we had a Lovo Sugar that was out. Headline earnings per share down 10% to 171. Expectation for full year is actually up 12.8% to 219. Or was expected to be to 1219. Revenue came in at 5.93 billion. The full year number is expected to be at 13.45 billion. So you have to work your own assumptions in there. And divvy per share came in a touch light at 37 cents. Expectation was for 41. If we look at Amplats, they came out with a full year trading update. Headline earnings per share seen at 20% lower. Expectation wasn't for as low as that. I don't have anything else to give you any feedback on the back of that. If we look at lots of shares going ex-div today, we've got Life Healthcare, we've got Spar, we've got Famous Brands, we've got MediClinic, we've got Invicta, and we've got Coronation. So there's a lot going on in terms of that today at the open. Keep an eye on that today. There could be some real. There's going to be obviously a big downward open this morning, and in the Aussie future being down 650 points. So it could be really interesting with some of these shares going ex-div today. It could also have some real mispricings in the open. Sorry, if we look at market data this morning, we had the China PMI numbers. So we had the official China reading was 50.3 for the survey was 50.5. HSBC PMI for China came in dead in line at 50, which is basically no growth. So that's obviously a negative there. We had Japanese PMI, which came in slightly weaker than prior. We've got German PMI, European PMI, we've got local PMI, and then we've even got PMI in the States today. And the only the only other thing that we have is the ISN manufacturing numbers in the States. So pretty much just PMI across the globe. Watch today in Europe. Obviously, those numbers could potentially move things a bit. All right, let's get into the maps. I've been told that there is quite a big strike level. So look at the Aussie here. It's definitely looking like it's double topped a little bit here. Not a little bit. It's definitely looking like it's made a double top over the last month. And you can see here we're dropping out from the previous lows of that whole range there. So I think that's important. We might see the height of this channel sort of move. That's about 1,500 points. So that's a hell of a long way to fall below the breakdown here, which would have happened at, call it 43,900. What I think's interesting here is what I hear is right at the level we're trading at the moment, 43,600. I'm hearing there's some major strike level, and so we could end up seeing some gamma selling, obviously as we're getting closer to that this morning, and potentially on through that. I think we saw gamma buying actually only maybe 2 weeks ago. This could be obviously the converse of that. I mean, it could really set things off, and this is the kind of the quick moves back to heightened volatility that we've talked about, that we hadn't seen in such a long time, and those are going to spring back on us again, I think, now that this is happening in the month of December. Actually could change things maybe going into the end of the year, so we got to watch it very closely. All right, let's look at light sweet crude. If you didn't see this move that happened in basically 2 sessions, it got ugly, and it got ugly fast as we dropped that bottom of the range that we tried to get in, or we tried to hang on to around 74. We just bombed out there in 2 sessions this morning. We're actually even a little bit lower, so we're below 65. I think that's obviously going to continue to put pressure. Remember, on our local exchange, there's only 2 that you can really have a look at that trade in volume. That's Sasol and that's Billiton. Billiton derives a little over 20% of its earnings out of oil. I think about 21%, and then Sasol obviously. Pretty much the bulk. If we look at spot gold, this is another one that we had talked about, and we talked about this retest of the 1,200 level, and if we talked about if we failed that test, or either way we might have punched through or failed, because we had so many sessions where we basically stuck right on that number. That we were going to have a huge move. Well, we got that huge move on Friday. We got a big rip after we basically put in 7 or 8 trading days in a row where we failed to break through 1,200. Got this big rip lower. I think we take out the lows here. I think we move down south of 1,100 and maybe even on down to $1,000 by maybe February of next year. So watch this closely. Could be a lot of room left to the downside there in a couple of these things. On the back of that, we'll have a quick look at Anglo Gold. Anglo Gold looking quite shaky here, starting to look like a bit of a bear flag, a longer term bear flag. I mean, this has been playing out maybe for a month and a half, the whole shape of this thing. But you can see there we're kind of testing right on support. And if I back out here a little bit, and this is one of the things I wanted to have a look at with this, is that this, I mean, if you look at it from this point of view, it really, really, really looks shocking. So we basically we had this huge move downward, right? We broke down below support, which is just below 120, and we literally haven't been able to get above that. I mean, we couldn't even make a proper effort to try to get back above that. So there's a resistance level. We flagged up into it. Now it looks like we're failing again already. I mean, this could just get totally messy here the way that it looks. We dropped this level this morning. We dropped this level this morning around, call it let's call it 98 just to be safe, which I think obviously we will, or gold price is lower and we close at the equivalent of 95 in the States. I think we got, 15 to 17 bucks a downside. So I think we will take out the all-time lows here potentially in Anglo Gold. I think it could get messy. So watch this one closely. We can look at MTN as well. MTN, we know MTN has this massive support level here. Wherever you want to draw it, somewhere between 116 or 118 and 120. We right on, basically closed right on that or close to that 118 level. And there's real, you can see we're bottoming at this exact same level that we closed at about 5 or 6 sessions ago. I think if we take that out, I don't know how much lower we're going to go in this thing, but I think we will probably go lower. I think the market is long of this. This has obviously had a lot of pressure put on it due to the fact that the oil price continues to fall. But the reason why that puts pressure on MTN is simply because they get so much of their earnings out of Nigeria, and Nigeria is so pegged to the price of oil, so the Nigerian currency starts to weaken as the price of oil starts to come down. So just watch that closely. Could come under a little bit more pressure this morning. Next one we're going to look at is Lonmin. Lonmin making a bit of a head and shoulder here, and potentially a significantly lower target. You can see there the left shoulder, right shoulder. There's the head. So I think if we drop 30 bucks in Lonmin, I think we got a quick 4.5, $5 a downside there, along with all the rest of the commodities in the sector. Wouldn't be surprising. The last one that I want to look at this morning is Naspers. So Naspers coming back again to fill this gap after making a nice move upward after the gap fill the other day. Except for today, it doesn't look like it's going to hold, at least definitely not on the open. Tencent showing down 3.23% right now in Hong Kong. 1430 is obviously the level. We drop that, then I think we're going to be maybe, I don't know, coming into supports, on the trend line here or something along those lines. I don't know where support comes in, but it can definitely correct quite a bit further. This thing could obviously bounce back up at the end of the day, but the open, it's going to get pummeled. And that's it for today, guys. Good luck out there.